In this presentation, I am going to describe the option strategy formation trick on the counter Tech Mahindra. So this is I am recording on 1st August 2017, and the company has yesterday produced the result. So result was good. So that's why company's share has moved by 5.6%. So it has also gone to a very high level, 416 level. It has gone from there. It has retraced back. So at this particular junction, how I can take the benefit of option strategy using the one standard deviation. Same time, I'll not be exposing myself to a great risk. So my objective is I should not take excessive risk. Same time, I can take the benefit of the profit in this particular counter, which has already moved by 5.5% post result. So definitely the result is good. That's why it has moved up. Now we wish to form a strategy using the one standard deviation. So I have just taken the view on this Tech Mahindra, and if you can just load the data, give the position for maximum 10 days, and you can just calculate, you will get the levels for the Tech Mahindra. So this is the levels you are getting for Tech Mahindra. So currently, so we are getting the first cycle, second cycle, and third cycle. 3 cycles of the uptrend, 3 cycles of downtrend as per the one standard deviation principle. So 10 days we have taken. So first cycle, irrespective of targets, we are getting the growth cluster has 416.40. That means this is the point where we can find a maximum resistance. If this resistance penetrates successfully, then we can go for the second cycle where we can find maximum resistance at 430. If this resistance penetrates, we can find out next resistance as 444. And same way as the support, 401 currently act as a great support if it is broken and fallen below 387 or 88 level. Then we can find out a great support here. Then third support will be 375. So once it is falling below 401, it will make all these targets. So 388.8, this is the zone we can expect a bounce back. This is the Fibonacci zones, which is given in the red color. These price points act as a resistance, or we can expect a trend change at this point of time. So currently we are at 408.75. Buy entry is placed at 411. And 406.18 will be the sell end. So once I have to wait for the trend to break out. Once it gives me a breakout above 411, so my strategy will be like this. So once my breakout, uptrend breakout I am giving above 411, currently it is current price if I take it, so it is 409 now. It has gone till 416.7, so 411 once it crosses this one. So once that price crosses to the level of 411, I'll be buying this, buy the future. And where is my trend change happens? 401. So I'll be buying a put option or 400 put option because my trend change happens there. So buy the trend, buy the put option. So that is at 400. So I am finding out a resistance here 416. Once it crosses above, then that it can make higher and higher target. So the nearest strike to 460. So I will be selling a 420 call option. So this is near to my uptrend resistance. So I'll sell it. Why I sold it? Because 400 put option what I am buying, I am paying a great time value to the market. So I do not want that my strategy should pay more time value to the market. I rather sell this call option so that I can reduce my time value component on my strategy. So currently at its 406 level it has come. If it is coming to 406 level, then what we have to do? So we are having a downtrend breakout at 406, and this 406 downtrend, once it is breakout given, so my strategy will be looking little different. I'll be selling the future, sell the future at this level, and I am having 400 put here. My 400 put here is the support lies, so the maximum targets in this levels I can get 395. So 401 level my maximum support lies, so I can sell a put option here, and I'm having a resistance at 416. I can think of buying a 420 call option. So buy call option, sell a put option, and sell a future. So by this process, this strategy is known as a covered call strategy or a covered put strategy. So this particular strategy, once you are forming and it is giving you a breakout here and you are selling it, it is a pretty good gain you can get. So 10 rupees of time value you are getting, another 5 rupees or 6 rupees value is here. So 16 rupees of time value you are getting, and you are just paying 8 rupees. So 8 rupees of net gain you are making in this particular strategy. 8 rupees of net gain you are making in this strategy. So considering 1100 as the lot size, some 8 to 8800 theoretical profit you can estimate. So based on the trend forecast, you can form the strategies in covered call and covered put in the first week of the settlement cycle. So first week of the settlement cycle, it is good to form covered call or covered put strategy. So you must tell me if I have formed this particular strategy. Say I have formed 406, I sell the future, I sold the put option at 10 rupees, 10 rupees and 10 paisa, and I have bought this at 7 rupees 85 paisa and I sold the future. So when I should put a stop loss and come out. So once the price goes above your level of 416.4, say once it is entering to 417, 418, that level, so you can also look at this pattern. Once it is crossing 417, you can book the loss and come out. 417, once it crosses, so you can book the loss and come out, or you can think of waiting till 419 to cross so that you can book the loss and come out. This is the 0.888 retracement. Once you are coming out that particular time, you can think of a covered call that particular time. You can think of a covered call, this particular strategy. So the benefit of forming this covered call or covered put strategy is you are having a limited exposure to the time value decay of the options. Sometimes you never compromise with the profit. Never compromise with the profit. One more strategy I wish to discuss with you, which is also a combination of net credit and net debit strategy in the market. And this strategy works very well for a projection of 10 to 15 days, and in case there is a choppiness in the market or the volatility falls in the coming 10 to 15 days period, then you used to get benefited out of this strategy. So I am just taking the example of Nifty because here you need the help of the next month contract. So for that reason only you need to take some counter whose next month series contract also will be very much valid. So if you are taking a 10 days view on the Nifty currently on 1st of August, so we have taken a reference of 10,125. It is telling 10,155 above. If it moves, then it has all probability to touch 10,278. Beyond that, it has a probability if it is crossing 10,212, it can go for higher targets. Same time, if it is falling below 10,047 to 10,026, it has all the probability to go down. However, 10,038 will be acting as a great support for the Nifty in the downtrend. 10,212 will acting as a resistance for the move. So this is what it is telling us, and based on this particular view, we are going to form some strategies. So currently we are at 10,125 level. So based on this particular view, we will be forming some option strategies, and it is a combination of net credit and net debit strategies. And in fact, you can say that in the far month, next month we will be forming some short straddle, and current month we can form some long straddle, or short strangle with long strangle also we can form based on this availability of the strikes. So that all selling side of option we will be putting for the next month, and all buying side of options we will be putting in the current month. So now if we are deriving so here you are market neutral. If the uptrend gives a maturity beyond cycle 2, you will be benefited. If the downtrend gives the breakout beyond cycle 2 in the coming 10 to 15 days, then you will be benefited. That will be your objective. And you need to hold longer. You will be getting some net credit, and you will be holding for 10 to 15 days of period. So based on my trend parameter, first I will be looking into 10,200 beyond second cycle I want. So this is the 10,200 is the resistance level. So my view will first go for the net credit strategy. So I wish to sell 10,200 call of September. So if I just focus on this September month series, 10,200 call, I'm getting at 155 rupees. So I'll be selling at 155. So again, I'll look back to my trend parameter. Once this 10,200 crossover happens, then 10,308 is giving me the uptrend breakout, and it has a chances to touch this 10,356 or 377 level. So I wish to buy a call option near to this level, 10,308 to 326 level. So I'll just go to the August series, and 10,300 call option I am getting at 48 and 350 as 35. So I'll go with this August month's 10,300 call option buy. So I'll be buying 10,300 call August and 48 rupees. I'm buying 2 lots. So this is 2 lots I will be buying. This is 1 lot I sold. So post buying this one, 10,200 I sold, 155 rupees, 10,300 call option I bought 48 rupees. Because 2 lots I have bought. My first lot, here 1 lot of sell and 1 lot of buy, converted to a net credit strategy. Now I have to make it as a net debit strategy I want. So 10,300 I sold August. Sorry, I bought August 10,300 call option. I will now focusing on the September, that 48 rupees what I have paid, I just don't wish to pay that. So 10,300. So I am just wants to get that 48 rupees. So I am getting a 10,500 strike, which is at 46 rupees in the September. So I am selling a 10,500 call September at 46 rupees. 46 rupees, that too also 1 lot. So what happened here, I have just 2 cross calendar strategies I have formed. 155 credit I got, 46 credit I got. So net 201 point I have got the credit. I have bought this 48 2 lots. So I have paid debit of 96. So net I have received is 105 points. So this is translated to a gain of 7,875 in this currently. I'll be holding on to this particular strategy. Till what point? Till what point? That is very important for me. Because I have just projected on the second cycle. If the second cycle gives a maturity, here my second cycle gives a maturity about 10,434. So, or the 10th means the second cycle gives a complete maturity above 10,482. So I'll be waiting for this level, 10,482 level, to book the profit, or I can wait for the downward cycle here. For second cycle, my downward cycle is 9,773, this level. So if this level comes, any of this level comes, then I will be at a profit. I'll be at a profit. If none of this level comes and I am just consolidating between 10,200 to 10,037, this level, if I am consolidating for the coming 10 to 12 days, then also I'll be having a profit. If I penetrate this level 10,482 or 9,773, then also I'll be at a profit. So you must ask me how much quantum of profit I can get. Since we are forming a calendar spread here, net credit calendar and net debit calendar spread, it is difficult to give you a theoretical estimation on the profit. Assuming in the coming 10 days period, having a theta decay of 1 to 1.5%. So theta also you can able to calculate if you can just go to the option tool and you can just load this August month, because September we have sold. So I am just going for a September and I am just loading the September data, and if I just go to further 10,200 call option and calculate this thing, I'll be getting a theta here. So 3.17. So 10 days period of time, I am expecting a 30% decay in the time value. So it is translating to 33% per day. 10 days time, 30% decay in the time value. So this money what you have got, it is almost 30%, and most of this theta will be around that. So you can say that if consolidation happens, then also we will be having a 30% gain here, 2,300. If there is an uptake or downtrek happens beyond this level, so it is going to 10,482 level or 9,700 level, then also there will be a more than 30% things will come. So around I can say 40% to 45% if there is a trend breakout happens. So 45% if I put it in a conservative estimate, so it comes to 3,500. So this is the amount of profit I can gain in case of a consolidation or a trend breakout in either direction. And it must have a smaller losses if it doesn't move and there is a volatility spike happens. If the price doesn't move, however, the volatility increases. So currently, if you look into this parameter, you have a volatility in the Nifty around 9.5%, and this is the conservative estimate of your implied volatility, because you have a very great long period till the September end. So you have a very small IV, you have a volatility in the underlying 9.5%. If this 9.5% of your volatility increases by 20 or 30%, you can say it goes to 13 or 14%. Same time, this IV also, which is pretty low, if it is going to say 5 to 7%, you can say some amount of losses you can get, but that losses will be in the few hundreds. It won't go beyond few hundreds. In case of a 50% rise in the IV and 50% rise in the volatility, if the volatility remains in this particular zone and you are getting a trend breakout or a consolidation, you can just get this amount of profit. So this is a great strategy. It takes around 88 to 89,000 worth of your margin capital. 10 days you can wait, having a great risk reward. So 1:3, 1:4 risk reward you can get. So this is a strategy. Continuously you implement every month and you can get good return from this particular strategy. And if you wish to learn about more about the strategy, which strategy I should implement when and how to get the benefit from the strategy trading, then you can opt for our futures and option course, which comes at a price of 3000 rupees only course if you want. So comes at a price of 3000 rupees. And if you wish to learn futures and options along with a in-depth trend analysis, then you can opt for our full package course, which comes with a price of 17,500. This is a one-time purchase. You can get that's this thing as an asset, so that you can utilize this concept in your trading and you can get benefit of that. More on these courses and product, you can call to our sales number here. Keep viewing this video, share this video with your friends, and try to register in our website so that we can able to communicate with you. Download the free ebooks and reports available in the download section of our website. Share with your friends. If in case any query, try to put in the inquiry or go to the contact us link and send us the email. We'll be glad to answer you.